Welcome to the Pyramids and Pagodas podcast, where we discuss emerging market investment opportunities and contextualize them with geopolitical and macroeconomic insights, drawing on our experience living and working in Africa, the Middle East, and Southeast Asia. You are joined by your hosts, Ultraman, who is an investment advisor focusing on emerging equity markets and alternatives, and me, Desert Fox, a due diligence and geopolitical risk specialist. This podcast is brought to you by the Pyramids and Pagodas blog, available at pyramidsandpagodas.com. As a quick reminder, nothing discussed here today is investment advice and shouldn't be taken as such.
Good day, everyone. It's Ultraman and Desert Fox here with another episode of Pyramids and Pagodas. Last week, we had the opportunity to meet Scott Osheroff, CIO of the Asia Frontier Capital Uzbekistan Fund, a long-only absolute return equity fund that invests in listed companies on the Tashkent Stock Exchange, as well as foreign-listed companies that have the majority of their business in countries bordering Uzbekistan. Given emerging and frontier markets are a focus of Pyramids and Pagodas, we are privileged to have Scott join us from Uzbekistan to share his wealth of experience and insights into this exciting market and what looms ahead. Scott has spent the last 8 to 9 years living across Asia frontier markets, including, but not limited to Mongolia, Myanmar, Vietnam, and most recently Uzbekistan. So without further ado, Scott, I will let you tell us how you got started in Asia, what piqued your interest in this region, and what attracted your focus to the Uzbek market.
Sure. Thanks, guys, for having me. So I guess just real quick, I've actually been in Asia 12 years this June, so time has gone very quick. I went to university in Boston and from LA originally, and basically booked a one-way plane ticket to Asia and said I'd figure it out. Like all good fresh American graduates, I ended up in Mongolia. So lived there on and off for 2 years, was between Mongolia, Cambodia, Vietnam, and then in 2017, I went to Myanmar to restructure a family conglomerate. So spent most of my time in sort of Indochina, and then in 2018, got invited to a investor tour in Kazakhstan. So figured come up, check the region, and since I was in the region, added 2 days in Kyrgyzstan and then a week in Uzbekistan. And Uzbekistan had a president from 89, I believe, up until his death in 2016, Islam Karimov. And Uzbekistan has the biggest population in the region. Population just in the past week hit 37 million, and the rate of change is actually accelerating. So there's a lot of potential here. And when I came here in 2018, May of 2018, there was no one on the ground. It was very weird with the day and age in which we live, where when there's an earthquake in the Philippines or somewhere else, you hear about it on Google in 30 seconds or a minute. Uzbekistan had opened its doors to the world and no one was paying attention. So we got very interested in the market, especially seeing the valuations at the time, where you had companies growing 500-600% year over year, trading at PEs of 1.5 times, 0.2, 0.3 times book. And then between Southeast Asia and Uzbekistan, I got a job as an adjunct professor, mainly for the visa. So I was teaching a few hours a week here in 2020, came up in January, and then of course pandemia struck. So it became my de facto home for the last 4 years.
That is quite the backstory, and it seems both your life and investing experience in this region has certainly paved the way for a very fruitful start to your venture in Uzbekistan. So you launched the AFC Uzbekistan Fund in 2019, and the fund has since returned an exceptional 59% in US dollar terms since its inception. Could you maybe help us unpack a bit about your investment research and process, and perhaps even some of the mistakes you've made along the way in this journey so far?
Sure. I mean, when you've got a capital market that is trading at such ridiculously cheap valuations, that's experiencing growth, it's hard to go wrong. The biggest challenge has been patience, which I'll get into in a bit. But basically, our thesis has been there's about 106 companies listed on the Tashkent Stock Exchange, and on the OTC market, there's another 350 or so. So we looked at all of them more or less, and I built financial data spreadsheet going back to, I think, 2014, the most, to get an idea of which companies were interesting, and then looking at which companies had liquidity. And then we really settled on not only which companies have the liquidity and are attractive, but which ones are the ones that when Uzbeks or foreign investors jump into the market and they ask a broker, what should I buy? They're going to name these companies. So we structure the portfolio around that. And these, of course, also happen to be the big blue chips of the country, mainly in financial services, materials, a bit of consumer goods. But they also have the best leverage to economic growth. So we've got a portfolio very leveraged to economic growth in the country. So we have about 24, 25 positions right now, but the bulk of the fund is in 10 positions. So, at the end of the day, it's a small market in that regard. So steel, cement, consumer goods, so wine production, dried fruits, beverages, then you've got financial services, banks, insurance. There's a commodities exchange listed, sort of similar to the NYMEX and the LME rolled into one. And in terms of sort of the challenges, the biggest one, bar none, is the patience required. The capital markets functions. The Korean stock exchange has 25% ownership in the exchange, so all of the tech is Korean, and it's in the process of being upgraded. So I could technically be on the beach in Sri Lanka and be trading, no problem. Don't have to be on the ground, but of course, from a networking standpoint and being able to have access and understand what's going on, it pays to be on the ground. But you have a bit of a walled garden scenario whereby there's new capital markets legislation that is in the process of being passed. It's been in Parliament for the past year and a half or so. And this is going to upgrade the infrastructure significantly. It's going to allow for digital brokerage account openings. Right now, if you're a foreigner and you're not in the country, you need to get apostilles, you need to get documents translated. It's messy. I'm not sure exactly how it is in Vietnam these days, but when I lived in Vietnam in 2013, 14, 15, on and off, was there for about a year and a half, it wasn't uncommon for an institution to take 9 months to open their brokerage accounts. Uzbekistan, even to this day, is much faster, but still it's bureaucratic and can be expensive with the apostilles. So the new legislation is going to digitize that process. It'll set the country up for being able to connect its financial markets to Euroclear, Clearstream, to bring in international custodians, and a variety of other things. So, and we had a very nice re-rating in the capital markets and in our fund in 20 and 21, I believe. But the challenge is new capital coming into the market, and sort of when the infrastructure is in place, we expect a new re-rating to occur, and maybe we get into valuations a bit later. But there are two companies that have reported their 2023 financials already, which happen to be two of our, there's two companies that are in our portfolio that have reported 23 earnings already. And they're two of our 5 largest holdings. One of them is a financial services company, and the other one is a cement company. And just to give you an idea, because it's a blessing and a curse, no doubt at some point these valuations will not be as juicy, even with the growth that we've seen. But it's a matter of patience, waiting for this next re-rating to occur. So the financial services company in 23, their earnings grew 16%. Book value grew 17%. They traded a 15% dividend yield. PE is about 7. The cement company had earnings grow 57%. Their book value was up 18%. And the cement company trades at a PE of 2.3 times and 0.36 times book. So still ridiculously cheap, even though these companies are up. In some cases, the financial services company is about 10 or 15x since we first got in. So it's the waiting game is the big challenge for the market, if you will.
That's fascinating to hear. I'm sure we can jump into more in-depth analysis on some of these stock picks that you've made that's been doing well so far. Probably a good segue into maybe discussing Uzbekistan from a top-down approach, because I'm sure a portion of your success to date has also come from the country's transformation narrative from leadership change. Now, we've got President Shavkat Mirziyoyev in power since 2016 and on his second term. You got things like currency flotation to privatization, just to name a few. Could you elaborate on perhaps the reform story in Uzbekistan so far, including the impetus for change and the progress that's been made so far? And additionally, how has the international community responded to these reforms?
Sure. So, Uzbekistan used to be a very backward country, forced labor in the cotton industry, a rather repressive regime. President Mirziyoyev was prime minister from 2003 up until 2016. Everyone thought when he got elected as president, he was going to maintain the status quo. But within 2 months, he announced a 5-pillar reform program to reform the judiciary, reform education, just broadly reform society as well, of course, is the economy. They floated the currency, so they devalued the currency 50% in line with the black market rate. They eliminated nearly all capital controls. For foreigners, there are no capital controls. There used to be. So that means that if you converted into Uzbek Sum, you could never get it out. Now it's no problem. And yeah, it's truly night and day. I got here when I first came here in May of 2018. It was 2 months after they finally allowed people to take photos of the beautiful metro system in Tashkent because it was guarded as a strategic object. So you weren't allowed to take photos. So crazy things like this. Police on the street checking passports, especially foreigners. That all disappeared by the time I got here. And then, in terms of dealing at the airport and just general efficiency, the country's gotten exponentially more efficient. So they've gotten also rid of, there's plenty of bureaucracy, but he's gotten rid of a whole host of it. So for example, now it's a system similar to Russia that Kazakhstan has as well. And you basically get a digital identification number and an e-signature. So like my rental agreement for my apartment is done digitally. I can open bank accounts, brokerage accounts digitally. So they've streamlined a lot of the bureaucracy in the economy. You don't really have to go and stand in line anymore. And as a result, you've seen a lot of investors come in. So, when you look at Central Asia, I get asked often, what is the situation or the relationship between the West, Russia, and China? The reality is that this country is situated in a location which is really quite nice because Kyrgyzstan borders China, Kazakhstan borders Russia, Uzbekistan borders neither of them. And this country is being influenced by China, Russia, and the West. So they're going to play all of them off of each other. But at the end of the day, if you were to ask me, this country is always going to remain close to Russia. Historically, politically, it's more closely tied to Russia. There's always been hesitancy among Central Asians to do big business with the Chinese. Nonetheless, Uzbekistan is, in my view, I sort of call it like a regional Vietnam minus the ocean. This country has the biggest population. It's the horticultural breadbasket of the region, and it should be the factory of the broader region. Sort of here and Iran, if you were to think of a near direct competitor. But again, Uzbekistan's a different beast in that regard. And this country, with its cotton production, it's the 6th biggest cotton producer in the world. You're seeing more factories being built and whatnot for textiles. Last year, exports were 3.1 billion, up from about 300 or 400 million when we came here in 2018. So they're doing a decent job of attracting foreign investment. The problem is that, like with any government, and this is the curse, having lived in a handful of these countries, is that when I lived in Vietnam, people complained about Vietnam having issues, and Vietnam has huge issues. Then I lived in Myanmar, and you speak with people about doing business in Myanmar, and Myanmar has huge issues. Then you realize every country has issues. It just depends where you're doing business and where you're focused. So the challenge with Uzbekistan is that everyone wants it to become, say, Vietnam tomorrow, for example, or Thailand tomorrow. The reality is that Vietnam took 30 years to get where it is. Thailand similar type story. So this country is moving in the right direction, but it takes a lot of time, and capacity is a big constraint on the government. The president can sign decrees to change things, but if you don't have the talent to execute on them, you have that lag. So they're very focused on attracting FDI, and what you're seeing now is Russia's the biggest investor in the country, but for example, there was a Uzbek delegation in January that went to China, and there were a handful of Chinese around. I mean, I live in the city center, so you have LTE and ZTE and BYD right across the street from me, their offices. But with this delegation, since January, you've probably seen 3 to 5 deals a week being signed. MOUs, and then sort of announced FDI, more tangible binding MOUs and whatnot, for joint venture in auto manufacturing here, logistics, infrastructure, mining, pharmaceuticals. Yesterday I read about a deal where there's a Chinese company that's going to build $1 billion chip factory outside of Tashkent starting next year. You have a $2 billion investment announced, I think, on Monday for a petrochemical facility here. So the Chinese are coming in a huge way. And then, sorry for being long-winded, but if you look at the region and who the investors are, it's Russia, China, Turkey, a bit of Korea, because about 3% of the population is historically Korean due to Stalin having moved them here from the Kamchatka Peninsula. But I believe that the world is fragmenting, and you saw this a handful of years ago, but it's accelerating. If you look at the region from the Middle East, include Turkey, Iran, up to Central Asia, throw in India and Pakistan, if you will, and then you've got Russia and China. The shape of this is a crescent. So I call this the new fertile crescent. This part of the world is going to do business with itself. It doesn't need to do business with the West. This part of the world has the majority of the world's manufacturing capacity. It has a huge endowment of natural resources. It has low debt levels. It needs more infrastructure connectivity, but nonetheless, they're all still able to do business with each other. And then you're also seeing alternative payment systems being created. Uzbekistan literally is at the heart geographically of Central Asia. And if you look at when the Chinese talk about the Belt and Road Initiative, the quote-unquote buckle is Central Asia, specifically Uzbekistan. So President Mirziyoyev has done a very good job of pushing the country in the right direction. The challenge is capacity, but the next, call it 5 years, should completely transform the country from where it is today, which is already immensely transformed from where it was when I first got here in 2018.
Well, thank you for that, Scott. I mean, basically, you just crossed off the next 3 questions I had, so very comprehensive. It's almost like you wrote the interview yourself. But you touched on quite a few interesting points there about Uzbekistan's own competitive advantages. One thing I'd like to zoom in on is productivity, the quality of the labor force. Of course, there is some like value add manufacturing going on in terms of the petrochemical sector and processing of the raw cotton output that Uzbekistan is so well known for. Would you say that the education system is also following a similar reform path to the overall political and economic system? Do you see an upskilling of the labor force, and that more of these value add activities will become commonplace in the economy?
So education definitely is being reformed. The curse, of course, is that, so I taught at 2 universities here over a year and a half. The universities are not terrible. The problem is that it takes a generation to reform the education system, because they sort of started with the universities. Now they're moving down the chain all the way towards kindergartens. But you look at just so I don't sound too optimistic, because there's huge issues here, like in any country. You look at the students that are coming into these universities, and one semester I was teaching Introduction to Entrepreneurship, so Introduction to Business. And I asked my students, what is 10% of 100? Everyone pulled out their phones. So you have huge issues here in education. And the problem, of course, again, not so I don't sound perpetually rosy, I realize that the biggest curse in education is when students enter university, they know nothing. But when they graduate with a piece of paper, they think they're geniuses and worth $3,000 or $4,000 a month. And that's scary. So you have plenty of smart people in the country, but the education system needs to be completely reformed, but it needs to go all the way back down to primary school. And they're working on it. It's just going to take time. But I mean, there was an international group that was bidding for a project who I'm acquainted with that a few years ago they were trying to get, I think it was a $3 billion project to expand the education system through the construction of new schools and whatnot. And of course, that means bringing in teachers. But it's a huge impediment to the intellectual capital development of the country. And then just to dig a bit deeper, you talk with anyone in business here, educated talent is very scarce. It's very expensive here. Like the big four, I think, are paying $1,500 to $2,000 for entry staff. And then you look at someone who's got 4, 5, 6 years experience, they're making $3,000, $4,000. Then you look at someone working in a cafe, they're making $300 a month. So there's a huge discrepancy because there's a huge shortage of talent. And then just to dig a bit deeper in terms of your comment on the labor force and productivity. Productivity in this part of the world broadly is not so efficient. So to build a textile factory here and whatnot would be a challenge to manage the people. But and I'll tell you a story in a second. But Uzbeks are probably the most efficient in Central Asia. This is a country of traders and entrepreneurs. So roughly 55% of GDP is SMEs. In Kazakhstan, for example, 70% of GDP is the government. So that just tells you, that this is a very entrepreneurial, very trader mindseted country. It's sort of Turkey light, if you will. But in terms of managing labor, it's a big challenge. I have an acquaintance who in the west of the country, he has 3 textile factories. And he said, every September and October, I basically have to shut down. So I have to plan my production around the autumn because that's when the cotton harvest is. And if you remember, under the former president, as a student or a civil servant or a nurse at a hospital, you went to go pick cotton. I don't even think you got paid for it. You just went to go pick cotton. Now there's no forced labor and they're paying pretty good prices. I think they're paying, last year it was something like 65, 70 cents a kilogram. And people can make more money picking cotton than they can working in factories. So this acquaintance of mine, he says, my factory is quasi shut down in September, October because the entire labor force more or less walks off the lot and goes and picks cotton for a month and a half. So there's a handful of unique labor constraints here. And then also, of course, you've got a few million Uzbeks working abroad. I think Israel's trying to get 1 million Uzbeks. Saudi wants 1 million or 2 million Uzbeks for labor. So you have them contributing to remittances, but there are definitely labor constraints in the economy, both from a productivity, talent perspective, and then surprisingly manpower.
If you mentioned, I think, perhaps in our pre-interview discussion, that it was a rapidly growing, it has a rapidly growing population, and that they're not affected by some of the aging population issues of the former CIS states. Why is that? And is there some difference between Uzbekistan and, let's say, like Russia, which has a rapidly aging population?
Well, I mean, even if you look at Russia, I mean, I believe that the population decline is actually beginning to bottom out, and I've seen some estimates that it should begin to accelerate. But you look at Russia, for example, it's historically a Anglo society. Well, if you look at who's having babies, it's people from Dagestan, Chechnya, Buryatia, Kazan. It's ethnic Muslims. So you're seeing the same thing here, and this is why I think that for better or for worse, that the 21st century is the century of Islam. You look at who's having babies; it's not Europeans, it's not North Americans. Really, it's in this new Fertile Crescent region. It's Muslim countries that are seeing huge growth booms. So, for example, in Uzbekistan, I have friends that have 6 kids. Typically, it's minimum 2, ideally 3 to 4. And then, I know people that were working at Goldman, HSBC, et cetera, in London for well over a decade. They came back here because they got asked to work for the government. And part of the excuse was they wanted more kids. So come back, you've got the family support. You don't have to pay 1,500 quid a month for daycare in London. So this is what's driving the huge population growth, which is great because, again, it's one of the few parts of the world where the population is growing and the delta is accelerating. So that's probably the main reason for it. But yeah, in Uzbekistan, I think the average age is 30.1 years. When I got here, it was 29 and change. So since 2018, it really hasn't done that much.
Oh, that's fascinating. And I guess, it then perhaps answers my next question, which would be, who's going to staff all the factories that will be doing value add exports? And, as you mentioned, there is reform in the education system. I think what I wanted to drill down into here is that this focus on value add exports, is that a key strategic priority for the government, given that they're probably not going to compete on price with the likes of Vietnam and China? Just they don't have access to ports. And already I think that ship, that, for want of a better term, that ship has sailed in terms of getting in a basement bottom of wages. So I suppose the government recognizes that, and what kind of support are they providing for value add industries? And apart from the petrochemicals and textiles examples, are there any other interesting examples that you could share?
Well, under the former president, Islam Karimov, he was very focused on import substitution. And this came about during the Asian financial crisis in the late 90s. So, and you look at where the world's heading today, towards one of balkanization. And if you have domestic resources, it's not a bad idea to create domestic industry. So arguably, he was ahead of the curve. I mean, Russia did this after 2014 sanctions. For example, I have Italian friends that live in Moscow, and you used to, when sanctions were introduced in 2014, you really couldn't get Italian cheese and whatnot. And now you've got great local producers of Parmesan equivalent, mozzarella, etc., stracciatella. So Russia has huge domestic industry because they've focused on import substitution. Iran, sanctions, they have a huge domestic industry because partially they're forced to, but again, import substitution. This country did it in the late 90s, and they're still focused on import substitution. And the import tariffs for a variety of things are very expensive to encourage domestic production and also to discourage consumption of various things. So, for example, like alcohol is expensive, but that's unique, even though there's a huge wine industry here, because in the Soviet Union, Uzbekistan and Georgia were the primary suppliers to the USSR for wine. But so that's still very much happening. But they've always had this value add focus, which is in line with import substitution. So again, you've got petrochemicals. They just launched 2 years ago a gas and liquids facility, which costs about $3 billion to build. They've got 2 refineries here. They're producing their own jet fuel. And in 2019, 2020, they signed a deal with Kazakhstan to start importing crude from the country. And I believe they're building a pipeline, if they haven't already completed it, to supply a refinery in Bukhara, with the agreement being that a percentage of the processed crude is going to be re-exported back to southern Kazakhstan, because the Kazakhs have underinvested in their country. In Shymkent, which is the 3rd biggest city, it's about 60 kilometers from Tashkent across the border, there's no refinery. So the Uzbeks will be refining product and exporting refined product. So the country has a very big focus on value add, also because, as you said, logistics are expensive. For your shipping analogy, it's one of the 2 double landlocked countries in the world, along with Liechtenstein. So it can be expensive to move things, and therefore the country can never compete on low quality, high volume stuff. It has to be higher quality stuff. So again, better quality textiles, and then in terms of agricultural products, this country has superb produce. Unfortunately, they're focused on exporting so much of it that right now we're importing bell pepper, we're importing lemon, and a variety of other things from Turkey. And for example, Tashkent lemons are famous in the region because they're a hybrid with oranges, and I think they're all going to Russia and probably Eastern Europe. We're importing Turkish lemons. At the bazaar, they're going for $3.50 a kilo. There's a little mini market by me that sells them for $5.50 a kilo. So not as, I'm sure in Hong Kong, that's probably normalish, but you used to be able to buy them for 60 cents a kilo. So the export earnings that the country's generating from these products are immense. And I guess the best way to look at the country from an agricultural standpoint is it's very similar to California, as California is to the rest of the United States, which California is not growing wheat and soya and corn. They're doing nuts, berries, peaches, nectarines, etc., melons. So much higher value agricultural products. And then, of course, processing with dried fruits and freeze-dried stuff and whatnot. So the country has always been focused on that.
So we've discussed quite a few of the tailwinds and bottlenecks, strengths and weaknesses that you're seeing in Uzbekistan in terms of economic growth and development. I was wondering how inflation fits into all of this, and if you had any thoughts here. It seems that the government has done a good job in combating this, and it seems to be trending in the right direction. I think you're looking at 8 to 9% annualized this year. But at the same time, you've got a fairly high interest rate of 14%. That's just been held in the most recent meeting, but may see some reduction later this year.
Yeah, I mean, I don't think you'll see a reduction later this year. When I got here in 2018, inflation was 19%. Now it's roughly 8%. So it's come down significantly. The problem is that the country is growing so quickly. Demand for credit is huge. Most companies are growing organically at a free cash flow because the cost of finance is ridiculous, which again, as there's more capital that comes into the banking system from abroad, as the cost of capital comes down, you have the same leveraging up that you saw in East Asia, which is going to happen here. And over here, it's going to happen for the next 20 years. Being at where they are in their stage of development, it's very similar to Vietnam in the early 2000s. So yeah, the central bank policy rate is 14%, but at TBC Bank here, I was at the gym earlier, and there was an advertisement for TBC, which is this Georgian bank listed in London and in Georgia. They're offering 25% on a term deposit here. So they're lending at roughly 30%. And keep in mind, if you're a corporate specifically, you're getting financing at roughly 30%, and you have to be 125% collateralized. So unless people have property, pretty much, it's very difficult to get financing. And then you look at the private banks, especially the private banks used to pay dividends in the first half of the last decade. And then as the country opened up, and even before it really opened up, there was a huge real estate boom going on here because it's their first sustained construction boom since the earthquake in 1966. So when most of Tashkent got flattened. So you're very far from a bubble, but they switched. They basically stopped paying dividends because they're plowing their free cash flow back into their loan book. And in 2019, I think credit growth was 65%. So there's a huge shortage of capital in the country, and that's not going to be addressed anytime soon. And also, the central bank in 2018-19 came out and said, we're going to switch to an inflation targeting regime because they realized that if they floated the currency, if they eliminated some capital controls, inflation could get out of hand, and they wanted to keep it down. So I believe over the next, call it 3 to 5 years, you're going to see the policy rate stay relatively tight. The cost of capital is going to remain relatively high. It'll slowly come down. But the government is very focused on rolling back subsidies because you have to remember, until a few years ago, this was a completely centrally planned economy. And you had subsidies for bread flour, cooking oil, and then, of course, utilities across the board. They're now in the process of, well, they eliminated bread and cooking oil subsidies because they were blanket subsidies for the entire population. The former Deputy Minister of Finance was involved in helping to eliminate these and then introduce targeted subsidies for the lower income population. But I mean, in my apartment right now, I can have a little textile factory, and if I wanted, and I would be paying 3.2 US cents per kilowatt hour. Starting the 1st of May, which I guess, according to when this interview is published, will be a few days ago, the first 200 kilowatt hours of electricity that I use is going to be roughly at that rate, but then above 200 kilowatt hours is going to be roughly 7 cents. And then, so it's going to be a tiered system. So they're very focused on eliminating subsidies because it's become a huge burden for the government. Is consumption of utilities has skyrocketed in line with the population and just domestic demand, courtesy of production. And again, the economy is doing very well. So as they try to eliminate this, their main focus is mitigating inflationary upside, if you will, rather than trying to have a cost of capital of 15% for the average person.
That sounds like a careful balance that needs to be struck there. Keen to sort of go back to what you mentioned earlier. On the Tashkent Stock Exchange, you mentioned that there's 106 listings on the exchange and another, I think, 300 OTC. I'm just wondering if you're witnessing a decent pipeline to its growth so far this year, and maybe perhaps some potential catalyst that could, I don't know, lead a further re-rating and valuation multiples across the board. And I suppose the reason for asking that is if we look at neighboring Kazakhstan as a bellwether, the AIX, Astana Stock Exchange, has seen quite a significant increase in the number of listings, and that's probably due to the number of Russian blue chips porting over from the LSE. But investor accounts have also ninefolded over the past 2 years to 1.5 million, and trading turnover tripled to over $580 million US last year. So, I mean, could a similar trend play out in Uzbekistan in the near term?
It should. I mean, near term, I can't say yes or no. Kazakhstan's a bit different because when I first went to visit the AIX, they had 12 private companies there. The stock exchange wasn't set up. And then you talk with the CEO of the Almaty Stock Exchange, and basically the government killed the Almaty Stock Exchange, which is the Kazakh Stock Exchange, and moved it up to Astana. So you have to remember that in Kazakhstan there are no capital controls, and most people, I'd say, in the developing world like to invest or have the ability to diversify their savings and invest in Western financial markets, mainly in America, because everyone wants to own Tesla and Google and all these lovely overpriced growth companies. So you have, especially during the pandemic, you look at the expansion of the new brokerage account openings across the world. Kazakhstan is saw the same thing happen. So a lot of people in Kazakhstan are opening brokerage accounts or have opened brokerage accounts because they can put money in Halyk Finance or in Freedom Finance, and they can invest in North American equity markets. In Uzbekistan, due to capital controls for the local population, that's not yet possible. But for example, the CEO of the Uzbek Stock Exchange, a gentleman by the name of George Parsashvili, who's the former CEO of the Georgian Stock Exchange in Tbilisi. There was a deal signed earlier this week with, I believe, the Emiratis or the Qataris, because there's a sort of a digital backbone infrastructure, if you will, between Qatar, the UAE, the AIX in Astana is part of it, and now Uzbekistan's part of it. So once this new legislation for the capital markets in Uzbekistan is passed, that will allow Uzbek brokers to open up foreign accounts and then allow for segregated sub-accounts. Then you should be able to have Uzbeks being able to trade not just in Uzbekistan, and at the same time, it'll be much easier to get money to come here to invest into some of the companies that are already listed, and then some of the planned IPOs that the government intends to do. The problem right now is that is really the missing link for this next re-rating, and we've been waiting for it. But in the meantime, these companies are still growing really well, so you're seeing multiple compression, and when that changes, that linchpin is eliminated, then you should see a massive re-rating in the market. I just can't tell you if it's going to be tomorrow or a year from now. But
that's my next
the underlying
question.
companies are doing well, so patience is a pain.
Yeah, and a virtue. So we must all be patient. And I can see how definitely like streamlining the brokerage infrastructure could boost stock market participation. I imagine it's very low at the moment, which would then translate to a general uplift in valuations. I think, looking at it from a retail investor standpoint, particularly as a foreign retail investor standpoint, has the entire market experienced growth, or does stock selection require a certain level of expertise? Is it common to focus on larger companies, or are there opportunities in smaller cap, illiquid, high growth stocks as well? You mentioned earlier in your own stock selection process, you were looking at, what would be the big attractions, which companies would draw in foreign capital quite quickly, the big obvious wins, and that forms part of your thesis. Would it be, by way of example, are you better off to just take a bet on the established number one player in the sector that may be a bit more expensive and more liquid, but doing that as opposed to the number two or number three player that has its own unique story?
No, it makes sense to do the strategy that we've employed, and partially there's a few reasons. One is liquidity is an issue in the market. I mean, when we came here, daily liquidity on average in the entire market was probably 20,000. Now it's probably roughly 200,000, so it's still peanuts, but moving in the right direction. So when you look at a small company that might be printing money, for example, there's a company that's listed. It's 99% owned by the government, and they have dry ports in Tashkent, and they're printing money. And I have a local friend that he and his business partner, they own some shares. We tried to buy shares early on for like a year and a half, and there was just none available. So and in some cases there might be a good company, a really good company, but if there's $5,000 of stock available, it's sort of a waste of time because it becomes a rounding error. So as a result, we prefer to be in the companies that we're in, which are the larger cap companies, where again, when someone comes in and says, hey, I've got $100,000 that I want to invest, and they ask their broker, where should I allocate it? And they're like, well, we've got a block here, we've got some liquidity here and whatnot. But for example, my broker, most of his revenue comes from trading in predominantly the OTC market, and that's because you have Uzbeks that are trying to gain control of local companies for a variety of reasons. Maybe there's in all these companies, the land is valued at basically nothing, even though it's you can privatize it now. So you have certain factories with 20, 30, 40 hectares of land, which if you acquire the company for $500,000 and privatize the land, you can develop that for much more than you paid. So a lot of OTC and block transactions, and then of course you have a handful of Uzbeks trading in the market as well normally, but most of, say, my broker's revenue actually comes from dealing with locals that are doing block trades or trying to get involved in taking over companies to grow them, or partial privatizations. And then in terms of valuations, there's really no difference. And this is what's crazy about this market. There's no real difference in the valuation of a OTC company that is going gangbusters and, say, the companies that we have. And the reason is because when I first came here and I was shown a spreadsheet of 40-odd companies from our broker, and I was thinking, there were banks that had dividend yields of 250%. And And I'm asking him thinking, what am I missing? I'm like, I should just take every penny of my net worth and allocate it here. And after a few more minutes of discussion, because I'm sitting there dumbfounded saying, how do we live in a day and age where these opportunities still exist? Well, in the USSR, what was very typical when markets were started, courtesy of the voucher system, when SOEs were distributed to the population, there was the concept of a multiple of par, which to us in the West means absolutely nothing, because par in Hong Kong is, one Hong Kong dollar. It's a penny equivalent, if you will. In America, it's a penny. So par value means nothing. In this country, par value means less than it meant before, but Uzbeks historically have traded on a multiple of par, and the reason they've done that is because under the former president, companies that were listed would typically take their cash and basically increase their paid up capital. And the reason they increase their paid up capital is because then the tax department couldn't look at them and say, hey, well, you've got a bunch of cash on your balance sheet that's freed up. We need to build a park. We need to build a school. You've been selected is a great donor for this project. So you have paid up capital in this country, which actually means something, because you used to have companies that used to just continually increase their equity in this regard. It's not really the case anymore. It probably ended in 21. But Uzbeks, say our broker and whatnot, with two brokers, but one of them, he still looks at everything as a multiple of par. And I thought he was crazy, because when we came here, I was looking at this financial services company that I mentioned to you before, this commodities exchange, which has a 14.5% dividend. And I think we started buying it for 4,000 Uzbek soom, and then it ended up going up to like 22 or 24,000 Uzbek soom. And I mean, we've made back our entire investment just via dividends. And I remember when I was buying it at 4,000 or 5,000, and my broker was like, Scott, can you stop buying shares on the open market? I can go and find shares cheaper for you, because employees and whatnot have stock, might want liquidity. And he's like, you're overpaying for the stock. It's super expensive. And I'm like, it's okay. You can think of me as being naive. I'll buy anything that you're willing to find for me at this price. And he's like, really? A year later, when the price was in the teens, he came to me and he said, do you think it's going to go higher? And I'm like, yeah, for this and this and this reason. He's like, okay, I'll buy some and let me know when you sell. So complete misunderstanding of valuation. PE, price to book, return on assets. This is not common knowledge in the country, which is what gave us a huge edge, because we're able to buy companies for peanut valuations, which the markets change. You see research now it doesn't include a multiple of par value anymore, because it doesn't matter. So they reverted to international valuation metrics, which is great, because we've been able to buy, superb companies, the blue chips for peanuts, and it really have benefited from that.
Fascinating. And I guess to do a lot of this analysis and your own research, you would be relying on companies' annual reports and disclosures. Do you find that there's a lot of skepticism among perhaps your investors, but even local investors in Uzbekistan, around the quality of the reporting in some of those countries' disclosures, or is it not a major concern?
It depends. So just to be completely forward and blunt with you, I remember we had a family office that wanted to invest with us from Europe, and the guy's done business all around the world. And he said, is there corruption in Uzbekistan? And I said, of course. And he's like, I'm glad that you said that, because if you said there wasn't, I would have no interest in doing business with you. And what I like to tell people is that, of course, there's corruption in every country, but I am American. I come from the most corrupt country in the history of the world. We legalized it. It's called lobbying. You don't pay money to go get a driver's license, but you go and pay lobbyists $500 million to get a law passed in your favor. There's no difference. There's corruption everywhere. Simple as that. In terms of the validity of financial statements here, companies here do a very good job for the most part of reporting. Everything's online. They report quarterly financials, any announcements for an EGM, AGM, dividend announcements. Everything's published on an online portal, so easy access. And when it comes to the quality of those financials, I don't see any significant issue with them across the board. Is there some stealing going on? Sure. You invest in junior miners in, Canada. Well, when someone's got $1 million a year expense budget for travel and they're flying business class and staying in the nicest hotels for investor relations, is that stealing? Think of it as you will. So if there's stealing in these companies, it's peanuts. And at the end of the day is a hedge fund manager friend who has done business in Mongolia for years one time told me, and I loved it. He said, you can't lie about dividends because dividends are cash. So when you've got a company paying 14.5% dividend yield, maybe the dividend could be 16%, but it's 14.5%. And you look at the way these companies are growing and whatnot, the reality is that they're pretty clean. And then to go a step further, the government and the regulator here requires all of the banks to be audited by one of the big four. And the blue chips are required to be audited by one of the big four. Because it's a question that we often get asked. I mean, even when I lived in Vietnam, people would ask, are these companies audited by one of the big four? And what I learned, having restructured a family Burmese conglomerate based in Yangon, is that and I was preparing some of their subsidiaries for audit with PwC. And what you realize is when you're rebuilding financials, because just to give you a quick story, one of their assets was a cement factory. So I had to rebuild 2 years of their financials because for the past 7-8 years since they'd started, everything was paper. I brought down something like a ton, literally 1,000 kilos of paper, and I had 6 or 8 accountants for about a half a year entering everything into Excel. And they had every receipt down to a receipt for lunch. I was shocked. But, there were 2 or 3 missing receipts for, a hotel or something. And, you have to recreate it, and you recreate it according to what's in the books. They just didn't have the piece of paper. But you realize that, the big four are great. Firstly, they don't send their best and brightest to the developing world. Secondly, when people say, oh, great, they're audited by one of the big four. Well, you look at Wirecard, you look at, I can't think of the others, but you look at, Arthur Andersen, you look at Enron, WorldCom, and whatnot. The biggest financial frauds in the world don't happen in these countries. They happen typically in the developed world. So is it nice that they're audited by one of the big four? Yeah. Does that mean that these guys are paying, $20,000 to $50,000 a year just for their annual audit? Yeah. Would I prefer that they didn't? Of course, because they're actually here, they're paying more than $20,000. So pluses and minuses. Yeah, I have no issue with the financials, is my short response.
Fascinating. Just curious, I guess a side note, on the dividend, is there any withholding tax on that for foreigners?
I want to say no. I believe that there was, and it was 5%, then went to 10% because there was a presidential decree on this, but now they've extended. I believe there's never been capital gains for foreign investors, and now there's no capital gains, I believe, for anyone. For dividend tax, I believe it's 0% through 2028, and then they'll probably extend it.
Interesting. Just like to touch on currency risk sort of more broadly. It's something that we talked to Michael McGaughey, a fellow sort of frontier emerging markets pioneer, on our last podcast. And he asserted that at times of currency weakness, local investors tend to plow more into equities to protect their wealth, thereby driving up asset prices. And if you can time the market well, buy before currency recovers, your forex upside can even cancel out any subsequent market drawdown. Now, considering the currency devaluation in Uzbekistan, you've obviously done very well in US dollar terms, but I'm curious to get your thoughts on how you think about this in terms of managing your book, and perhaps for the average retail investors, do you think they've experienced some diminishing returns on their investments?
Yeah, we don't hedge. There's a bank here, I think, that's sort of offering some hedging products, but you're paying, I think, mid-teens to do so, so it makes no sense. The currency here, unlike sort of what you're referring to, sounds like Turkey, where you have real devaluations. this country has a slow but steady devaluation because they're trying to remain competitive from an export angle. They also have a trade deficit, which is getting better, but still, luckily they've got a huge amount of gold, so they're able to mitigate the trade deficit. And then, of course, you've got a lot of remittances, but the currency, I believe, is going to perpetually depreciate, similar to Kazakhstan. But really, I think the best analogy is, or it's most analogous to Vietnam. So you have a country that wants to be an exporting nation. Money doesn't really flow into the stock market because of liquidity, and just Uzbeks, still a lot of them don't realize that there's a stock market here. That'll change in due course. Most of them keep their savings in USD because you can go to any bank and open up an Uzbek Sum or a USD account, so people put it in USD. And again, since the banks are capital constrained, they're paying roughly 7% on USD term deposits. What's good, if I can tangent real quick, is that the banks here will not lend to anyone in USD. They'll only lend to companies that generate revenue in USD to mitigate currency risk. So people keep in USD. You can buy gold and silver here, no problem, which is produced in Uzbekistan. Otherwise, you're getting term deposits in the mid 20% range. So they'll keep it there. But the government is right now in the process of the exchange and the regulator are proposing to the government to create a US dollar denominated corporate bond market. So if that happens, that should see a surge of issuance and get a lot of banks, insurance companies, and then even corporates investing to be able to generate some double-digit, probably 12, 13% annual returns in USD. So, yeah, and then for us, we don't hedge. It of course eats away at performance, but when we look at the performance that we've seen so far to date, when we get the pieces in place for this next re-rating, which I assume when it happens will be rather substantial. I'm not betting on a 15%, 20, 30% return for the fund. I'm betting on something much more in this next re-rating. That should mitigate any currency depreciation. So for us, it's just par for the course.
I see. And for foreigners who are interested in investing in the Uzbek market, at the moment, I know we discussed reforms earlier and new infrastructure, but at the moment, what's the process of setting up a brokerage account in country? And as a follow-on to that, once everything's set up, are there any challenges with liquidating positions and capital controls?
It's probably one of the easiest brokerage accounts in the world for a retail investor to open if they come here. You come, you show up at a broker, you give them a scanned copy of your passport, no notarization, no apostille, scanned copy of your passport. I think you've got about 2 forms to fill out, residential address, phone number, email address, 2 signatures. By the end of the business day, your brokerage account will be open. Within 3 days, you'll be emailed your login and username or your login and password for the online trading platform. Then you wire money to your sub-account at the National Bank of Uzbekistan, state-owned bank, and you sign one conversion letter, scan it, and email it to your broker. You're off to the races. You begin deploying capital. Once you buy shares or bonds or whatnot and you liquidate them, you can convert back into USD or I believe euros, no problem, and repatriate. We've never had any issue with it. Sometimes we've done it all within a week. Sometimes it takes 2 weeks or whatnot, but there's no issue with it.
Just lastly, I want to touch upon investment opportunities you're seeing in the market now. You've briefly discussed some of the sectors or industries that are promising over the next 5 to 10 years. Are there any specific companies that you're looking at that you're particularly bullish that sort of sets them apart from other opportunities you've come across? By way of example, you mentioned a financial services business and cement business earlier.
Yeah, I don't really want to name any names if you don't mind, but the banks are super interesting. There's a few private banks which are, and it's vanilla banking. It's so very basic, but they're printing money. So there's 2 or 3 of them. There's a leasing company that's private that's preparing to IPO in due course, which is really interesting. Leasing mainly industrial products. So there's them. And then you've got cement, steel, which are listed. There's a consumer goods company, the biggest consumer goods conglomerate in the country. So they do wine, beer, vodka, soft drinks, water, juices, dried fruit, freeze-dried vegetables for export. So it'd be great to have some more exposure to the consumer, just because the entire economy is effectively listed, but in terms of the companies that you really can get exposure to, that's the main one for consumer goods. So yeah, I mean, the entire economy is doing well, which means the vast majority of companies on the exchange are doing well. It's just a matter of sifting through and looking at the ones where if you want to deploy, say $1 million or $100,000, where can you actually get liquidity? And it's by way of default, the names that we have as our core positions.
Great. Definitely some interesting breadcrumbs for us to go and look around at companies in Uzbekistan, and we may very well be putting out a piece on 1 or 2 companies. And we're just about coming to the end of our interview, so we wanted to finish up by asking, for those of you or of our listeners who are interested in investing with you or learning more about the Uzbekistan market, how can they get in touch with you? Is there is AFC Uzbekistan open to both retail and institutional investors?
Yeah, it's open to everyone. We accept U.S. and non-U.S. investors. For non-U.S., the minimum investment's $10,000, and for U.S., the minimum is $50,000.
Great. All right then. Well, thank you very much for your time, Scott, and we will put your LinkedIn profile in the show notes for anyone who'd like to get in touch. And yeah, we appreciate you coming on, and we look forward to catching up with you again soon.
Thanks, Scott.
Thanks so much for having me. Take care, guys.